In 2001, HP announced a $25 billion merger with Compaq, a decision that would soon unravel the legacy of a once mighty tech giant. Founded in 1982 by Rod Canyon, Jim Harris, and Bill Murto, Compaq Computer Corporation quickly rose to prominence, challenging the dominance of IBM with its innovative products and aggressive pricing. The trio, former senior managers at Texas Instruments, pooled together $1,000 each to start the company, driven by a vision to create portable personal computers. Their first product, the Compaq Portable, released in 1983, was a resounding success, generating $111 million in revenue within the first year, a record-breaking achievement for a startup at the time. Compaq's rise was meteoric. By 1991, they had become the world's largest PC manufacturer, riding the wave of burgeoning demand for personal computing. Their success was anchored in strategic decisions like adopting Intel's microprocessors and Microsoft's operating system, which allowed them to offer IBM-compatible PCs at more competitive prices. By the late 1990s, Compaq was a household name, with revenues peaking at $25 billion in 1998. However, the early 2000s brought significant challenges. The PC market was shifting towards commoditization, and competition from nimble, cost-efficient companies like Dell began to erode Compaq's market share. Dell's direct-to-consumer sales model and build-to-order strategy allowed it to cut costs and offer lower prices, presenting a formidable challenge to Compaq's traditional distribution methods. In a bid to regain its footing, Compaq entered a merger with HP, a move spearheaded by HP's CEO Carly Fiorina. Fiorina, who became CEO in 1999, was known for her bold vision and was one of the most powerful women in business at the time. She saw the merger as an opportunity to create a technology powerhouse capable of competing with the likes of IBM and Dell. This combination vaults us into a leadership role in virtually every aspect of our business, Fiorina declared. Yet, beneath the optimism, there was significant skepticism and internal resistance. The merger was one of the largest in tech history at the time, valued at $25 billion, but it was fraught with challenges. HP's board was divided, and Walter Hewlett, son of HP co-founder Bill Hewlett, publicly opposed the merger, citing concerns about its potential to dilute HP's innovative culture. Despite fierce opposition, the merger was greenlit in March 2002 after a contentious shareholder vote. The integration of the two companies proved problematic from the outset. Combining two corporate cultures with different operational styles and market strategies was a Herculean task. HP's and Compaq's product lines overlapped significantly, leading to difficult decisions about which products to keep and which to discontinue. The anticipated revitalization failed to materialize as quickly as hoped. Instead, HP faced a significant drop in stock value, reflecting investor skepticism and uncertainty about the merger's benefits. By 2013, the Compaq brand was officially discontinued, erased from the corporate landscape. The merger led to approximately 8,500 job cuts as both companies sought to streamline operations and eliminate redundancies. Compaq's profits had already seen a staggering 82% drop prior to the merger, with losses totaling $279 million in one quarter in 2001. The financial implications were profound, with HP's stock price experiencing volatility and a general decline in market confidence. The merger, which was intended to bolster HP's standing, instead highlighted the difficulties of integrating two massive organizations. The story of Compaq is a cautionary tale of how rapid growth can lead to complacency and strategic missteps. Compaq had been an innovator, a disruptor that challenged the status quo, but by the time of the merger, it was struggling to maintain that edge. The commoditization of PCs meant that differentiation was increasingly difficult, and Compaq's traditional strengths in engineering and quality were not enough to stave off more agile competitors. Carly Fiorina described the merger as a bold move that would lead to greater innovation and value for customers. Yet, the reality was far from her vision. The integration was marred by strategic misalignments and cultural clashes, and the anticipated synergies were elusive. The technology industry is notoriously volatile, and Compaq's erasure from the tech landscape serves as a stark reminder of how a company's fate can change with strategic missteps. The aftermath of the merger was significant. Fiorina, who had been hailed as a pioneer, faced increasing criticism over the merger's perceived failures and was ultimately forced to resign in 2005. Her departure marked a turning point for HP, which continued to struggle with the integration and competition from other tech giants. Meanwhile, the employees who had been part of Compaq's journey watched as the brand they had helped build was quietly erased, a ghost of its former glory. In retrospect, the Compaq-HP merger offers valuable lessons about the challenges of corporate consolidation, especially in a fast-evolving industry like technology. It underscores the importance of strategic alignment, cultural integration, and the need for adaptability in the face of market changes. Compaq's legacy, though overshadowed by its demise, remains a testament to the innovative spirit that drove its rise, and its story continues to resonate as a powerful example of the delicate balance between growth and sustainability in business.